Hello everyone, good morning and welcome to today's morning report on Thursday the 8th of January with me, Rich Perry, market analyst at Handtech Markets. The European trading session has got off to a flying start, and that has come on the back of this big rally that we saw on Wall Street last night. 1.2% up on the S&P 500, big strong gains, and that's broadly been sort of come about because of this improvement in risk sentiment that we've seen in the past 24 hours. We've seen the flow into risk assets improve. We've seen the flight to safety just diminish slightly. Elements such as trading instruments such as gold, the yen have dropped away, and interestingly, oil has actually also started to find a bit of support as well. So treasuries, also yields are starting to increase as well. So just a general move back away from all the safe haven assets that had been benefiting at the in the first few days of the year, and that is certainly benefiting equities in the last couple of days. Strong gains on the European markets, 1.3%. For both FTSE and DAX, 1.6% on the CAC today, on the CAC today as well. So equity markets very strong. Interestingly as well, I'll show you the VIX has started to come off, and that has certainly been reflected of the improvement in the risk sentiment, and certainly if that continues to decline, then you can imagine we could well see quite a strong equity market rally in the coming days, as we've seen the S&P 500, for example, falling 5 days in a row. A big strong fall on the S&P 500, but yesterday a rebound, and that has coincided with the fall in the VIX volatility. So if that VIX volatility continues to decline, we could be fairly positive. In terms of the currencies and forex markets, this dollar continues to remain strong. The rebound against the yen has dragged the yen back above 119, which is a pivot level. I'll talk about that in the chart analysis in a bit. Also, interestingly, we've seen continued downside in the sterling. Not too far away now from a test of that $1.50 mark. Incredible sell-off that we've seen in cable in the last few months. Maybe testing that $1.50 mark. However, as I will say in also the chart analysis of cable, maybe it's getting a little bit oversold at the moment, but we'll see how that goes. Also, euro strongly lower. Interestingly as well, we're seeing the Aussie and the Kiwi find a bit of support today. Aussie 0.5% up, and that's actually my chart of the day, which I'll talk about also in a little bit on this video. Now, what we've got out today in terms of economic announcements, not a huge amount, but the market will be focusing on the Bank of England giving its rates decision at 12 o'clock. No change expected. You've got in recent weeks the economic data out of the UK has been deteriorating, falling away. You've got falling inflation, you've got the PMI data also disappointing to the downside, so the chances of a rate hike are pretty slim, and we get ever closer to that big general election that comes in May. So the closer we get to that, it becomes increasingly unlikely that the central bank will do anything on rates. So that's at 12 o'clock today. And then we've got the weekly jobless claims for the States. Now, jobs are a big focus towards the back end of this week. We've got obviously non-farm payrolls tomorrow, and the weekly jobless claims are going to be an interesting focus at today at 1:30. We had the ADP number out yesterday. Nice positive improvement there on the ADP. So whether jobless claims continues to improve remains to be seen. But we've got a consensus at 290,000, so that is slightly better than last week at 298, and you can certainly say that the recent trend has been for jobless claims to be falling. So that takes us to my chart of the day, which is the Aussie dollar. I said earlier that we've had a slight rebound in the Aussie dollar. Now that comes on the back of these three sort of almost doji candlesticks, where actually you saw a close within 7 pips of each other on 3 consecutive days. So interesting sort of consolidation of that. And doji candlesticks basically mean that there's a bit of uncertainty and a bit of uncertainty with the prevailing trend, and perhaps it could be the big first signals of a reversal. On this Aussie dollar, you've also got a slightly bullish divergence on the RSI, and also You could argue that these MACD lines are also improving as well, and the stochastics as well. So I would say that MACD would certainly suggest that we're still in a bearish configurations. So this is certainly would just be a bear market rally, but certainly at the moment the Aussie is improving. Now this is on the hourly chart. We need a break above that initial resistance at 81.57, and then the key resistance comes in at 82.15, and that 82.15 is this blue line here, and that would constitute some sort of a base pattern if it were to be seen. Fairly long way off yet, but certainly the improvement is being seen at the moment. Yes, that is coming on the back of this bullish divergence on the momentum indicators. So nice reaction here to the upside on the Aussie dollar. So I wish you good luck in your trading on all the markets today, and I will speak to you later. Thank you.